Good, good, good. All right. So let's get into this. We had actually a decent size update. So yeah, after yesterday, we broke the range in the market. One of the things we were talking about is probably we can't chase any strength up at the open. But if you get a dip, it may hold. You can see like the market actually tried to go in red. And this is really indicating kind of the change in character of the market where, in previous weeks, like if you had kind of broke under these MAs and rolled under, like you would have probably like fallen and kind of refilled some of this area. But we're not really getting that right now. You can see like 1.8% on the QQQs. That's a big day, for a market index. So you are getting this kind of heat, and you're seeing it also in the individual stocks that are also rolling around. So this is all like a bullish kind of development, in that the price action itself is changing quite a bit. I think that's going to be, that's one of the most important things that we can have. Like sure, clearing these levels is important, but like how's that price action? Like what's our actual eyes telling us? And you can see here, like we've been into these areas before. So the first pullback will be really like a tell. Like if we can back in, when we finally do pull, and my guess is if we gap up tomorrow, that would do it. But when we finally pull, does it make a higher low, or do we actually sit there and come back down into this range? We don't necessarily know yet, but we are starting to see some evidence of some fun stuff. So let's go into some of today's trade. Mara's been a winner for us today, but the first trade was actually didn't do anything. So this is a rubber band setup. You have a stock that's a 1, 2, 3, 4, 5 days, and then it had a couple days rest, and now you're 1, 2, 3, 4, 5 days, and today was a day 6. So essentially, right, the ins and outs of a rubber band setup is when you get a candle that's completely outside the upper Bollinger Band, your stochastics have to be over 80, but 90 is ideal. And it probably was 90 in the morning, but right, it's come back down. That sets up the exhaustion. So what happens is when you're already got an extended step and then you gap up, that's like snapping the rubber band, right? That's your exhaustion. We call that a sucker's gap, because a lot of times people will see a gap up and they'll think, oh, gap up, like I want to ORB it or, kind of hit this thing long because it's got something going on. That's the wrong way to really look at these things, because, the overall daily chart's telling you like this thing is too extended, right? It's so basically doubled in a couple days. And this is not like some low float, right, biotech stock, right? This is a $1 billion company at the moment. So it's not like a low float stock where, like something like that is even really sustainable, beyond like what we're seeing. So I wanted to take a short on this, on the exhaustion gap, and you can see kind of off the bat at the open. So we shorted this thing. I could have played this a little bit different. So I shorted this thing literally just off the bat at the open. Like once it gapped up here, like, I wanted to use kind of the pre-market high was around, there was a base between 1380 and 14. So if you look here at the kind of pre-market, right, data, you could see like right off at the bat, like see how it gapped up here into this range. So like you have this is the pre-market range on this. If you go into here, and it looks a little bit messy at times, but if you go in like kind of right here, you can see this like zone is like a nice range that it's kind of been like working itself into. So, at the open, when it kind of like popped up and then broke back through that bottom of that range, and I just memorized the levels because I don't like using the pre-market data because it makes my charts just too herky-jerky. Like I want to be able to see the gap. And so I'll just memorize the levels, and that way I can come in hot on it. So I know that kind of that 1350 was the zone. So, once it spiked up at the open and just broke under that, right, I can take that short and then use this high as, my stop placement. So I'm only risking 20 cents, 25 cents, which is ideal. So now like what's going to end up happening here is, it actually ended up spiking down about 1350. So I was up like, frankly, I guess I was up about 40 cents on it, which on a $13 name is a decent. And I normally would cover into that. So I was probably being a little bit greedy on that, but this is a high reward type of play. So you usually do want to hold for a little bit more. There are some setups that are like just scalpy McGee's, meaning like you come in and, right, you take that quick trade. and then there's some that are like a little bit more meaty where you want to like essentially trade around them, sashay in and out of them a little bit to get like that much bigger type of trade. And this is a bigger type of setup than like, say you're just doing a momentum setup, right, on like NVDA, which is like, right, just kind of going up every day. That's like just a trend setup that because it's got momentum and you're kind of scalping along with it. This is a rubber band setup, which is right a little bit more juicy in terms of the RR. So I could have probably took maybe some off the table here at like a third, and kind of put a stop in my buy price, but it didn't work like that. So, as soon as it just broke back up over this level, I just market ordered it and, covered it. So I ended up losing 6 pennies on it. Not a huge deal. It's worth the shot on it. And then look, later on, like we're going to be able to reshort it again, which we did, so as you see here, like, okay, so now like, okay, it needed to just spike its way through. And 14 was kind of its pre-market high. And sometimes they have that like kind of last gas spike. So, ended up spiking here. When you see these candles here, see this wick here? So wicks is when you see wicks, it's like essentially, it is telling you that there's sellers, right, coming into this, especially in an extended name. When you see a wick like that, there's sellers into it. And then see how like it wicks again? So there's sellers into it. So as soon as this thing, as soon as I see these wicks right here, like I take this thing short at 1380 because I got these 2 wicks I can kind of manage around. And then the VWAP is the confirmation. Like, normally I would hammer this thing, not here at the wicks and anticipate it, but I would do it at the VWAP. But because in this particular name on eTurd, it's hard to borrow. So on eTurd, like if it's hard to borrow, you can't market order the short. So you have to use limit orders. And what happens is like when the bottom drops off so fast that if you're doing like the limit orders, right, you probably just won't even get filled. So what you need to do is like, even before that happens, you need to like anticipate it a little bit and start shorting well in advance of that. Then once you got that, like once you got the meat of that, now it's just off to the races. So what I want to do is like kind of use my MAs to start covering around into them. So we took some down into the first flush, then, covered some down into the 9 EMA. And now the key is the red to green spot, right? Like the red to green spot's going to tell me something really incredible. So what I want to be doing is like watching this thing, really closely, because that'll give me confirmation that the rest of the day we can probably keep shorting this, right? So now like what's happening is once it goes red to green, I've got this 20 EMA here underneath. So I want to cover some into that too. So I cover up the rest, at 1269, and I just keep a few for lotto, and I'll keep a few for lotto so I don't forget about it. But also because I got a really good average up here, right? So that, if I end up adding somewhere else, I'll still have a really, really good average. So then, this thing later on kind of just jerks around here. And so you can see what ends up happening is, it ends up breaking, back under these EMAs here. And so like, see how like it kind of fizzles out here and it breaks back below these EMAs. So now I've got confirmation that this thing is about to roll red again. And so I short this thing, right as it's breaking under these EMAs. And now, right, like we have this thing, going down. And so you can see this dotted line was acting like a real turd here, right? Like, see how it was just really, really holding here. And we were watching this thing forever. And so you ended up getting like kind of a big green candle here and it kind of spiked back down. And it finally rolls red here, right? So this is like a telltale sign. This dotted line's been hanging it up for a while. So you flush down, and this is the nature, right? You want pop down, lower high, pop down, lower high, and it's just following into the EMAs. We want that stair-stepping movement as it comes down. And now, right, like now you're starting to get this kind of flushy McGee. And when you get the flushy McGee, that's when, you've got yourself a nice, right? That's when you got yourself a nice doohickey over here. So that'll be something to just be mindful of. Hold on 1 second here. I guess, hello. Yo. Yeah, I'll be here. All right. Cool. I'll see you in a little bit, brother. Peace. Welcome to Florida.
Oh, we got a guest?
Yeah, I guess his name is Alex. He does some podcast over here. He'll be staying downstairs.
Okay, maybe I should just do some sound recording.
I mean, he won't be here for an hour anyways.
Okay.
So probably just make sure his room's ready, I guess.
I will.
Good. So now look, we covered some down into this at 12:59. I apologize about that. We covered some down into this 12:59, and then now it's like starting to really trend, right? And you want to see this stair stepping action again. Pop into the 20 EMA, right? Reflushing. This is like perfect, and so we're still riding a half. We're still riding a half from here, and like an eighth from here. And, we'll just keep doing this thing. Till it doesn't, like you can see here, nice smack in the QQQs right now. So that's going to be good. Our next trade of the day was our second trade of the day was in ROBLOX. Guys, this is a very, very simple pattern here. So ROBLOX has essentially a flag pattern on its daily, right? It's been leading the way in the market for a little bit, like, even before the market started really showing some teeth. Like ROBLOX was already popping. So I have a trend line drawn of where the flag pattern is kind of in, it's like this 41 zone. So if you see here, like at the open, like, right, you popped up right into that level of resistance. And then, right, we're just doing an ORB. So to do an ORB, you need 3 candles sideways. Usually it's got to be over the VWAP. So you got 1 candle, 2 candle, 3 candle. As this thing busts, right, you're going to take it, put a stop under. And so I anticipated it a little bit. We got 40, 90. So I got inside the flag a little bit so that my risk would be a little bit tighter. And then it immediately started working. Like we were in this thing for like a handful of minutes before, right? Like it started handful of seconds before it started to really, really push. So then now when it's starting to push like this, it's just a matter of scaling out, right? 41.50, I take some off the table, and I scaled out very, very badly in this one. There's no getting around that. 41.40s, and then 40.70s. I took out some more, and this was bad scaling. So you can see here, like, right, especially because we just entered it. I mean, I entered it right here, 933, right? And now we're talking about 41.42, right? 40.70. So I'm scaling out too fast on these things. That was a little bit of a misnomer. So I could have done a little bit better on that, and kind of held up a little bit longer because it did get into the 42s. And then, we relonged some again, and it ended up being flat on the thing. So I had a really good entry on this, but I definitely feel like, I scaled out a little bit early. One of the things I've noticed that's been happening last week as the market's been, a little bit herky-jerky at the open is I've had a lot of trades where, I've been up pretty nicely, and then I've given back the profits, just from like maybe going a little bit too extra. So that'll be something, and also I got to keep in the back of my mind. So I want to be taking these. I want to be taking these profits a little bit quicker, sometimes, just for the fact that I may leave some on the table, but that's okay. Like, that's the nature of the game. We still want to be able to, we don't want to be giving back profits. It's just a big pain in the butt. So, even though I sold all this into a spike and left maybe 50, 60 cents on the table, it's like, who cares, right? Like, we want to just stack the cash, if we can, and then it'll start, it starts working out a little bit better for us. So let's get into some of these other ones over here. So we had a couple trades on this, NVDA at the open. So the first one I took was, as you can see, like when the market started to heat up, this was a big trender the previous day. So when the market started to heat up at the open, NVIDIA opened down, and then it started to immediately like reverse on this thing. So, as it started to reverse here and it kind of crossed over this level, I started to load this thing back in, and knowing that like kind of this 171 was like where it had to break through, and once it broke through and then it just started struggling here, I ended up selling and just taking my, 50, 60 cents profit on it, because there's just not much we could do on it. Now, I made a telltale mistake on this, and this is a rookie mistake. When you have this kind of stuff, So you could see like, at some point the market was pulling back at the open. So if you look at the Qs, right, the Qs were pulling back a little bit at the open here, but they're just pulling back into the EMAs, and the kind of the market structure has changed a little bit. And so, we have to be careful, like not just, getting sucked into the shorts just because that's how the market was acting a few weeks ago. Doesn't mean that's how it's going to act now. So we got to be a little bit careful. So like when the market started to roll over like this, I ended up taking a short in this NVIDIA, but, and it looked like it had it. Like, see how like it broke under the MAs and it was like kind of busting down, man. It looked like it had it, but it really didn't. It looked like it had it, but it really didn't. Like, so if we're zooming in here, like you can see here, like I thought I had it. And reality, I probably should have been right trying to bounce it there just based on how the market's been acting lately. So it ended up holding here. And then, man, this is a candle. You got to be careful. This tells you how strong the market is. You don't get these. These are called MPCs. We haven't seen MPCs to the long side in a long time, right? This is MPC, and then this is a double MPC. You never see two MPCs in a row and then a secondary follow through. So that's all like really good stuff right there. I consider that just a donation. We'll consider that a small donation of, every blue moon when when the market changes, you'll be suckered into shorting, and you just got to get out quick. So I ended up losing like 70 cents on this. What are we shorted at? Oh, I shorted 170.70, and I ended up covering at 171.40. And I mean, it's not even about like, I didn't even hold it to my stop loss. Once I saw this thing like dip down and then it immediately started to reverse, it's like, you just got to get out quick, right? You don't even want to like mess with this where it's like you're giving it to your stop loss or going to think about it. Like you just get out and move on. That's all you can really do. Then, later on we took another trade in Netflix, a trade in Netflix where you can see here, like this thing had earnings out today and it filled its gap and it started to really kind of marinate over here over its MAs. So, as it starts to test these highs, because it's a little bit extended coming in, what I want to do is just wait for like an inside candle, like a narrow range candle inside that bigger one, just to allow it a little bit of breathing room to get into it. What that'll do is allow your range to tighten, because sometimes, look, you'll get the FOMO and you just know it's going to go. But if you can just wait one candle or two candles, like what'll happen, especially if they're just the inside candles, that'll allow the range to tighten up, but it just give the stock just enough breather for you to just kind of go in and have yourself as fun. So as it started to breathe here, then I can add this thing in. So I added like 208.20. That ends up being like a little bit of an easier location because you've got your 9 EMA likes now starting to tighten up under it. And frankly, you can wait this out, right? Like, there's other entries that are going to happen here that you can do. And this has got a lot of heat on it. And that's telling you something like, right, Netflix's earnings, like they're saying they're losing customers, but like the market reacted to it in a really, really good way. That's a positive. Like you want to see stocks, reacting well to earnings. And what happens in bear markets is sometimes the news is so bad that the bad news is just like everybody knows, right? Like, for example, like some of these stocks that we used to trade are right, like $1, $2, $3, $4. They used to be $50, $60, $70, $80. So like, now like this stock will have, some stock will have bad news out. People are gonna be like, yeah, but we already know like it's a turd. Like, right, this thing was $700. It has bad news out, like nobody cares, right? You have like a really, really big base here and you're at that point where it's like, oh yeah, we have bad news out, but we already know. Like, of course they stink. We know that. It's priced for stink, right? So then if you can just unstink a little bit, then, you get yourself a good reaction on some of these. And I think I'll probably cover up the rest of this in a little bit here and get out for the day. It's past my bedtime. We'll see if this follows through here. And then I think probably into this next push, we want to take the rest off. It's got a lot of room to fall, by the way. We can keep shorting. The bounces are adding a few here there just because you have probably down to the 10 spot, room to fall. Like it's a nice bullish move, but like this is going to be, it's too extended. It's got to pull back and it'll probably be a nasty one. You can see the volumes coming in on the selling too. So as always, hopefully that helps, guys. Let me know if you need anything. Peace.